Hey, my name is Jason Nicholson and welcome to my YouTube channel. I want to talk about a buy-to-let mortgage that you could have a look at if you need to get your monthly payments considerably lower. They've got a rate at 2.99%, but there is a catch, and it's quite a big catch. But I think we should look at all the products on the market and discuss how they can benefit people and what use they could have for lenders that potentially have got themselves in a sticky situation. Now, you might be a buy-to-let investor or someone that wants to invest in buy-to-let, and I think it's good to understand why these deals exist and why they might be something that could help you get out of a very, very tricky situation. Now, if you're new around here and you haven't done already, please do make sure you subscribe to the channel over there and hit that bell notification. We're on the way to 42,000 subscribers now. We just hit 41 the other day. And let's make sure we get some more views on this video. How do we do that, you ask? Simple. Smash like, tickle like, do something to the like button. That really helps with the YouTube algorithm and massively helps the channel grow. So thanks to everyone that does that. So what's going on? Well, look, sometimes a buy-to-let investor could buy a product, a house or a flat, and they then have to come for a remortgage, and things have changed. Their circumstances have changed. Maybe the rent that they were getting had to drop in that area. That's going to get a big impact on how much they could borrow, and it's also going to impact the monthly payments because they might get offered a different product. Now, they also could have a difficulty with the monthly payment because maybe you purchased a property while interest rates were ultra low. I've got one buy-to-let mortgage where fortunately I've got it for 5 years, but the rate's only 1.5%. Now, in that scenario, if my mortgage then went up to 4.5%, my monthly payments would triple. Now, at the time of purchase, that property might have looked really good and might have stacked up for everybody. But the fact that the payments then tripled, suddenly that deal doesn't work. Now, you've got two options in that scenario. The first option is that you top up the payments, as in you top up the balance. You reduce the borrowing. So maybe you have to put an extra additional deposit in there to be able to qualify for a mortgage with another lender. But that's not really ideal. The other way is that you get a lender that has a low rate but a higher fee. You see, with a buy-to-let mortgage, it's the monthly payment that's taken into account when they lend you the money, not so much the fee. Now, what you're doing in this scenario is kicking the can down the road, but that might get you out of Dodge and allow you to keep the property and then maybe reevaluate reducing your borrowing on the next time that you borrow. So these mortgages aren't perfect. The fees are high, but they are something to consider. And also, I think as a buy-to-let investor, it's always important to know what options there are, and they give you a get out of jail. That could be an option. So this lender I want to talk about today, they're called MT Finance. And they have cut their rate considerably this week. So their rate has cut by 0.24%, which is good. And they've got a headline rate here of just 2.99%, which is a good rate, as you'd agree. That's probably the lowest buy-to-let rate that I've seen on the market at the moment. If you've seen a lower rate, do comment below. Let me know. I'd like to know all of the lenders that have better rates than that so I can go and check them out and decide whether we should make a video for you guys. So that is a competitive rate. Now, this is a 2-year deal. And so that's good. It's not going to lock you in for a long period of time. But here's the kicker. And here's where you're absolutely gonna flame me in the comments. But as I said, these deals have a purpose. There are certain people that need to get on these deals just to pass the affordability and keep the property, and you're kind of kicking the problem down the road. The fees. I'm scared to write it. the fees on this are high, 7%. 7%. Now you can halve that because it's a 2-year deal, so it's 3.5. So it kind of makes this deal around 6.5%. Now, for some people on buy-to-let mortgages, you are at a 6.5% rate. Maybe you refinanced in the Liz Truss era or somewhere around then. There are some people that have mortgages at that level. So when you look at it like that, it's not quite as bad. So you're looking at around 6.5% here. But also what you're doing is you're massively reducing your monthly payment. So you're going to keep your cash flow, or it's not going to be as bad as if you had a 6% mortgage. So your cash flow will be preserved. But this allows some people to pass affordability where they wouldn't do that. Now, would I recommend, if you were buying a new buy-to-let product, that you would get this? Not at all. This is not for those type of people. Would I recommend that if you were on a rate of 4 or 5%, that you'd consider looking at this to reduce your monthly payments, but with the fact that you're kicking that 7.5% onto the balance that isn't going to go down because it's interest only? Not at all. This is really only for people that have a product that is problematic, and the problem is that they wouldn't pass affordability and they would have to top up their payment if they didn't do something. And this is where this kind of product really fits in. So it's a specialist lending. It's not for everyone, but I do think that as investors or someone that wants to be an investor, you should know that these products exist, because you might need to get out of trouble one day, and this does give you that freedom. Now, another thing to consider here is if this deal ends, you need to be able to move on to a lending with someone else. This is going to be cheaper than bridging loans, for example. So if you were looking at a bridging loan, which some people are, to get them out of Dodge temporarily, this is cheaper than that. If this deal expires, then the rate that you would need to pay is 5%. Their standard variable rate is 5% above the base rate. That's high. So at the moment, that would be 9.5%. So you've got to make sure, if you line up a deal like this, you've got somewhere to go afterwards. What do you think about this? Clearly, you're not massively keen on the fees, but what do you think about having an option to move a product across if it temporarily gets you out of a problem and allows you to keep the property? Do let me know in the comments. Do make sure you like this video and share it with anyone that's interested in buy-to-let. It's good to get the good, the bad and the ugly about property investing. Make sure you subscribe, and also make sure you take the time to check out all the other content as well on the channel. There's nearly 1,200 videos now. Maybe start with this one right here.